Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
All right, so let's look at the calendar. It's Friday, January 23rd, 2026. And if you made the mistake of opening your portfolio app this morning before your coffee, well, I'm genuinely sorry.
Yeah, it is a sea of red. I think a lot of people are tempted to just, delete the app and come back in a month.
Or maybe a year. Bitcoin's bleeding, Ethereum is taking a nosedive, and that fear and greed index is flashing bright orange.
Yeah, fear. The signal that usually makes people panic sell.
Exactly. The headlines are all screaming, crash, bubble burst, the usual stuff. But, and this is why we're doing this deep dive, I've been looking at the data, not just the prices.
The on-chain movements.
Right, and the infrastructure bills. And it feels like I'm looking at two totally different realities.
It's the classic split screen.
Yeah.
On one side, you have the price action, which is pretty abysmal. And on the other, you have construction. Massive, massive capital deployment.
Okay, so our mission today is to connect those dots. We have to figure out why the market is supposedly crashing while billions are flowing into infrastructure.
And why the Middle East is suddenly buying up U.S. power capacity.
And of course, why the state of Kansas has apparently decided to become a crypto hedge fund.
That Kansas story is wild. But you're right, this narrative disconnect is the widest I've seen in a long time.
So let's start with the crime scene. The market, the numbers. Well, let's just rip the Band-Aid off. Bitcoin is trading at $89,460.
So we've lost that 90K support.
Lost it. We're down about 6.5% on the week.
And Ethereum is faring even worse. It's sitting just under $29.50.
That's an 11% haircut in 7 days.
Ouch.
The total market cap is just hanging on at $3.11 trillion, and the fear and greed index is at 34.
And we know the culprit this time. It's the ETFs.
It's definitely the ETFs. The outflows are just undeniable.
We saw nearly $1 billion, 995.7 million to be exact, leave the ETFs in just the last 24 hours.
That is institutional money hitting the eject button.
It sure looks like it.
But hold on, because this is where I started scratching my head. I was looking at stablecoin charts, and I expected to see a drop there, too.
Right. When people cash out, they go back to fiat.
They send it to their bank. But look at Tether.
You spotted the anomaly.
The 24-hour volume on USDT is over $80 billion. 80. And USDC is doing over $14 billion.
That does not look like money leaving the casino.
Not at all. It looks like money pushing away from the table, but, keeping the chips in hand.
That is exactly what it is. We call it dry powder. If that money was truly leaving the ecosystem, we'd see the market cap of stablecoins drop. And we are not seeing that.
So they're hedging.
They're hedging, not exiting. Investors are selling Bitcoin, swapping into digital dollars, and just sitting there, waiting.
Waiting for a specific price point to jump back in, I guess.
Or a specific event. When you see stablecoin volume this high during a price drop, it's like a coiled spring. The liquidity is there, it just lacks confidence.
And here's the other data point that makes me think the crypto is dead narrative is just wrong. DX volume.
The ratio, yeah.
The ratio of trading on decentralized exchanges versus centralized exchanges usually sits around, 40%?
Right around.
It just spiked to over 47%.
That's a significant deviation. So what does that tell you?
To me, it says the tourists are leaving through the ETFs, but the locals, the people who actually live on chain, are busier than ever.
That's a great analogy. The ETF investors are mostly passive. They see red, they sell. But the people trading on Uniswap or Jupiter, they're the power users.
Right.
A 47% dominance for DXs suggests that core user base is not only sticking around, they're actively rotating capital, hunting for opportunity.
Or they just don't trust the centralized exchanges during volatility.
That's always a factor. Self-custody starts to look very attractive when the market gets shaky.
Speaking of custody and trust, we have to talk about Kansas.
Senate Bill 352.
I read this Bitcoin Strategic Reserve bill, and I had to read it twice. The headline sounds great, but the actual mechanism, it sounds a little bit like state-sanctioned theft. Am I being too harsh?
Theft is a strong word, but it is certainly aggressive. What Senator Craig Bowser is proposing is that the state takes custody of unclaimed digital assets.
Unclaimed meaning if I don't touch my crypto wallet for 3 years, Kansas just takes it.
Basically.
Mm-hmm.
If they can't reach the owner for 3 years, the assets escheat to the state. Now, this already happens with bank accounts.
Sure, unclaimed property laws, but usually the state just holds it in a vault for you.
Exactly. This bill says they're going to put it into a fund, and this is the crazy part, stake it.
They're going to stake it to generate rewards.
For the state, they want to use these seized assets to generate yield.
Okay, but let's play this out. I'm in Kansas. I have some ETH in a cold wallet. I go into a coma, or I just decide to HODL for 5 years.
Right.
Kansas seizes it, they stake it, then, I don't know, the validator they use gets slashed and they lose some of it. I wake up, I want my ETH back. Who pays for the loss?
That is the million-dollar question.
Yeah.
The bill says the original owner can claim the principal. So if they took 10 Bitcoin, you get 10 Bitcoin back.
But you lose all the gains they made.
You forfeit the gains. And if they lose the principal, well, then the taxpayer's probably on the hook to make you whole.
It's a fascinating gamble. The state is essentially taking a zero-interest loan from you.
And acting like a hedge fund. Feels
Yeah.
like a very slippery slope.
Yeah, if Kansas pulls this off, every state with a budget shortfall is going to copy this. It almost forces you into a use it or lose it situation with your own wallet.
You'd have to pin your wallet once a year just to prove you're still there.
It's dystopian and innovative all at once. But at least it's happening while the feds seem to be finally getting their act together.
The joint SEC-CFTC event next week. The Harmonization Summit.
Harmonization. Sounds like a choir practice. For the last 4 years, it's been more like a street fight.
It has been a total turf war. Is it a security? Is it a commodity? The industry was just getting caught in the crossfire.
And under the Trump administration's appointees, the vibe has shifted, hasn't it?
Completely.
Yeah.
The mandate now is U.S. leadership. You can't lead if all your companies are fleeing to Dubai because the rules are unclear.
So this is about drawing a clear line in the sand. This bucket is securities, this one is commodities. Stop the lawsuits, start building.
That's the goal.
Which brings us to the builders. BlackRock, they just dropped their 2026 thematic outlook.
Right.
And I feel like every year people say this is the year of tokenization, but then nothing really happens. BlackRock seems to think 2026 is actually it. Why?
Because the plumbing is finally connected. For years, banks were just running little pilots on private blockchains.
Just experiments.
Exactly. Now, with more regulatory clarity and actual infrastructure in place, they're ready to move real liquidity.
So when they say tokenization, they're not talking about monkey JPEGs. They mean putting the S&P 500 on a blockchain.
That's it. Real-world assets. Stocks, treasuries, real estate. BlackRock sees a world where you can trade a fraction of a commercial building for a treasury bond instantly, 24/7.
Settled in stablecoins.
That's the vision.
So that's the high church of finance, the really serious stuff.
Mhm.
And then we have to talk about the carnival outside the church. 21 Shares just launched a Dogecoin ETF.
Ticker symbol TDOG.
I mean, come on. We're talking about digitizing the global bond market, and in the next breath, we're putting a Shiba Inu dog on the NASDAQ queue. Is this peak absurdity?
It's easy to laugh at, but look at the market cap. Dogecoin is sitting at $20.9 billion.
Wow, even after this drop.
That's bigger than a lot of companies in the S&P 500. It's graduated from being just a joke. It's a distinct asset class now.
A proxy for retail liquidity and internet culture.
And 21 Shares launching a regulated one-to-one backed product for it that legitimizes it.
It's just wild to think about a pension fund maybe getting exposure to Doge, but, you know, it does show Doge's dominance. Shiba Inu is what, under 5 billion?
Yeah, there's only one king of the memes. Everything else is fighting for second place.
Okay, let's pivot to what I think is the biggest story of the week, the infrastructure. This is where the whole fear narrative really falls apart for me.
I agree.
Because if this whole space is dying, why is the Middle East pouring, what, $13 billion into U.S. data centers?
This is the convergence.
Yeah.
The AI boom and the crypto infrastructure, they both need the same two things.
Compute and power.
Compute and power.
Okay, so let's break down that Dubai deal. The Damac Group, $12 billion.
$12 billion for 2,000 megawatts of capacity.
Can you put 2,000 megawatts in context for us? Is that a lot?
Oh, it's massive. A typical large data center campus might run on 30 to 50 megawatts. A nuclear power plant produces about 1,000.
So Damac is effectively securing the output of 2 nuclear power plants.
Dedicated solely to AI and compute infrastructure. And it's happening on U.S. soil.
And the CEO went straight to President Trump to announce it. This is geopolitical.
Absolutely. The Middle East knows oil isn't the future. Compute is. But they don't have the grid or the low latency advantages of the U.S., so they're exporting capital to rent our grid.
And the Saudis are doing the same with Project Humane.
Right. $1.2 billion from their public investment fund. They're targeting 250 megawatts, partnering with Elon Musk's XAI.
It's a global arms race for processing power.
It is. And when you look at that, the daily drop in crypto market cap feels almost irrelevant. The price is volatile. The concrete is permanent.
Right, and these centers will probably host Bitcoin mining right alongside AI training.
It's a perfect load balancing act.
So this overlap, AI and crypto, it's the theme of 2026. But it brings up this huge debate we keep seeing from listeners.
The DePIN debate.
The DePIN debate. Do we need AI tokens? Or is AI just a tool we pay for with Bitcoin?
Right.
And I'll be honest, I'm skeptical. I look at something like ChatGPT. It works because it's centralized. It's fast. I don't want a decentralized network of toasters trying to reach consensus on my answer.
And if we were only talking about chatbots, I would agree with you.
Yeah.
Centralization is always faster and cheaper. But we're not just talking about chatbots. We are talking about artificial general intelligence. Agents that will control money, legal contracts, maybe even physical systems.
Okay, that definitely raises the stakes.
If you have a single centralized AI that becomes the world operating system, and it has a kill switch controlled by one company, that's a single point of failure for civilization.
So you're arguing for inefficiency as a safety feature.
I'm arguing for redundancy and censorship resistance. DePIN isn't about being faster than OpenAI. It's about ensuring that compute power can't be turned off.
Okay, but what about open source? Elon made Grok open source. Doesn't that solve the trust problem without needing a token?
Open source solves the logic problem. You can see how the machine thinks. But it doesn't solve the data problem or the history problem.
Explain that.
The open source code is just the recipe. But who bought the ingredients?
Yeah.
And did someone poison them? Blockchain provides an immutable ledger. You can prove, cryptographically, that a piece of data was created at a specific time and hasn't been altered.
It's a truth layer.
Exactly. In a world of deep fakes and AI hallucinations, paying a premium for a truth layer becomes incredibly valuable. That's the bull case.
That actually makes a lot of sense. It's not about making the AI smarter. It's about making it accountable.
and auditable.
So, bringing it all back to today, the portfolio looks terrible.
But there's a lot of dry powder waiting on the sidelines.
We have regulatory clouds clearing up, even if Kansas is getting a little too creative.
And we have the largest capital deployment in tech history happening in the physical world, building the foundation for the next decade.
So what's the detective's verdict?
The verdict is that the money didn't leave the building. It just moved from the gambling tables to the construction site.
So the smart move isn't to panic. It's to watch that stablecoin volume. When that 80 billion starts moving back into risk assets, the reversal is going to be violent. In a good way.
Don't let the red candles blind you to the cranes in the sky.
I like that. That's a good way to put it. Before we go, I want to leave everyone with a final thought based on that AI debate. We always think faster is better. But as we build AI into the bedrock of our society, ask yourself this. Is the inefficiency of decentralization a bug? Or is it the insurance policy we can't afford to skip?
Safety has a price. We just have to decide if we're willing to pay it.
Chew on that this weekend. And try not to check the charts every 5 minutes. We'll see you in the next deep dive.
Take care.